When the pandemic hit in 2020, it seemed like we might be in for an energy crisis as demand collapsed around the world. People stopped driving, businesses shut down, and the price of nearly every energy commodity collapsed. Now, the tables have turned. The economy is picking up again, especially in the US, and demand for oil, natural gas, and even coal is on the rise. But investment in new capacity isn't meeting this renewed demand, as companies and investors have been hesitant to put money into fossil fuels. The result is that energy stocks that have underperformed the market for years are now some of the best performers in 2021. And one thing that is becoming clearer and clearer is that the energy crisis that's bubbling up now isn't going to end anytime soon. Oil, natural gas, and coal prices are likely to remain elevated, and maybe even move higher as demand outpaces supply on a global level. Why are energy prices soaring? We'll be looking into that in a minute. Meanwhile, welcome back to ICE, your hub for all matters related to investing, e-commerce, and entrepreneurship. If it's your first time here, take a second to give us a like and hit the subscribe button below. Plus, don't forget to hit the notifications bell for more updates. The US economy is facing a new threat: rising energy prices. Crude oil has risen 64% this year to a 7-year high. Natural gas prices have roughly doubled over the past 6 months to a 7-year high. Heating oil has risen 68% this year. What's more, prices at the pump are up nearly $1 over the past 12 months to a national average of just over $3 a gallon. Coal prices are on record. According to economists, higher energy prices could push up inflation in the coming months, damp consumer spending on other products and services, and ultimately slow down the US recovery. The higher prices are being driven by rising demand and tight supplies. As the pandemic fades and consumers around the world step up spending, factories and service providers are ramping up production, which requires energy. On the other hand, oil supplies are tight because oil exporting countries have decided to increase production gradually in measured steps instead of opening the taps more widely. Natural gas supplies are running low after a freeze in Texas earlier this year that drove up demand. Besides, Hurricane Ida forced nearly all of the Gulf of Mexico's gas output offline, along with higher demand from Europe, where inventories have dropped because of hot weather, lackluster wind power generation, and lower imports from Russia. Coal prices have been pushed up by rising demand colliding with supply held back by carbon emission reduction plans. Many analysts believe these factors will push prices up further in the coming months. Moody's Analytics projects oil will rise to between $80 to $90 a barrel by early next year, from $79 now, and natural gas prices to $6.50 to $7 per million British thermal units, from $5.50 now. JP Morgan Chase & Co. gives a worst-case scenario of oil rising for the next 3 years and reaching $190 a barrel in 2025. Electricity prices rose 5.2% in August from a year earlier, the largest gain since early 2014, according to the Labor Department. Let's dive deeper to have a clear understanding of these factors in the energy market. Coal industry. The most surprising energy trend in 2021 is what's happening in the coal industry. After years in decline, coal is seeing a resurgence as US coal plants are used to meet increasing electricity demand, and countries like China use more coal to run power plants. Since coal had seen demand fall in the years leading up to the pandemic, reducing investment in mining, even a small increase in demand can send prices soaring. On the spot market, coal prices have nearly tripled this year as the supply and demand imbalance has widened, and without an increase in mine output, which doesn't seem to be on the horizon given that few countries want to increase their carbon emissions, the problem may get worse before it gets better. Natural gas production. Similar supply and demand dynamics are playing out in natural gas. Yes, natural gas production is lagging behind demand. While natural gas consumption has actually been very steady over the past few years, production is down from its late 2019 peak as producers have cut back on investment. Prices are starting to react, which could lead to more production long term. But if the economy picks up or the winter is cold, we could see demand exceed supply even more, leading to even higher prices. And it'll take months, if not years, for producers to respond. Oil. Not surprisingly, oil markets are in a similar situation. The demand for oil is surging, but supply is not. The US oil production has dropped by about 12% since the pandemic started, but demand is coming back sharply and could soon exceed pre-pandemic levels. According to the US Energy Information Administration, an average of 18.2 million barrels per day of oil were consumed in the United States in 2020. Between June and August 2021, consumption was already up to 20.8 million barrels per day. That's not only a sharp increase in demand in a short period, but demand is already back to pre-pandemic levels. After years of being oversupplied, oil and gas markets are now seeing supply constraints, and we're seeing the fallout from energy companies cutting capital expenditures during the pandemic. For example, ExxonMobil announced earlier this year that it will spend $16 billion to $19 billion on capital expenditures this year, down from an original budget of $33 billion for 2020 before the pandemic hit. Even though oil prices are higher than pre-pandemic levels and demand is also back, management said that they expect capital spending of just $20 billion to $25 billion annually through 2025. So spending is being cut back even as energy prices rise, and that'll likely put more strain on the market. Coal, oil, and gas companies don't seem to have any appetite to increase spending even as profits rise and commodity prices go up. Even if they did, higher raw material prices, equipment shortages, and labor shortages could lead to slow increases in production, putting pressure on the supply side of the energy industry. Renewable energy. The fastest growing segment over the last decade has clearly been renewable energy, led by wind and solar energy. The problem for renewable energy answering the supply crunch highlighted above is that it's not an on-demand energy source that can fill the market need right now. When more supply is needed, it can take years to get projects off the ground. While renewable energy may not be the solution to the current energy crunch, it will continue to add supply to the market that will generate energy for decades. And higher coal, natural gas, and oil prices around the world make projects being built right now more economical. If you're an investor looking to tap into the energy market, you need to keep this in mind in the long run. Wind and solar plants generate power for decades, so once they're built, they're like a baseline source of power. And if renewable energy takes market share from fossil fuels when fossil fuel energy markets are undersupplied, there will be a smaller pie for fossil fuels to fight over when energy markets get back to a more balanced state. Price pressures look set to continue. On the demand side, consumers are back to pre-pandemic levels, at least in the United States, and demand could grow as the economy improves and stimulus leads to more investment. On the flip side, supply doesn't seem to be keeping pace. Companies have little ability or incentive to increase investment and can simply cash in on higher commodity prices. Oil, gas, and coal prices may be up big in 2021, but it's very unlikely that this trend will change anytime soon. Maybe that's good for oil and gas stocks for the foreseeable future. Higher prices are already stirring concerns of an economic crisis in Europe and Asia, where shortages are particularly acute. In the US, analysts say the effect should be less severe for several reasons. Natural gas prices have risen by much less because the US is a big producer of the commodity and much of the supplies stay within the country. Gas supplies aren't as tight as oil inventories. What do you think about the energy prices soaring, especially after analysts have warned this looks set to continue? Drop your comments below as we'd love to hear from you. We hope you found this video insightful and enjoyed watching. If you are yet to subscribe, don't be left out. Go ahead and smash that red button and turn on your notifications bell for more updates. See you in the next one.